All right, today we are diving into Molson Coors, ticker TAP. Now, their latest earnings report had all the ingredients of a disaster, one that should have sent the stock plunging. But it didn't. So we're going to break down exactly why the market zigged when every single sign pointed to a zag. Let's get right into it. And that really gets us to the heart of the puzzle this quarter. You've got Molson Coors missing on their earnings, missing on revenue, and they even lowered their guidance for the rest of the year. So why on earth did the stock close up? That's the big question we're here to answer.
So just look at this. This slide lays out the paradox perfectly. A miss on earnings per share, a miss on revenue, and they lowered their forecast. I mean, that's usually the trifecta for a stock getting hammered. But instead, it ticked up 1%. What you're looking at is something called a relief rally. It's what happens when investors have already priced in the absolute worst-case scenario, and the actual bad news, well, it just wasn't quite as catastrophic as everyone feared.
So what gives? What did investors see that wasn't screaming from the headlines? To really get why the stock did what it did, we have to look past those misses and dig a lot deeper into the numbers, into the brand new strategy, and the whole context around the company.
Okay, first things first, let's just get into the hard data. This quarter was really all about some major financial resets. It tells a story of a company clearing the decks to start a new chapter. All right, first up, underlying earnings per share. It came in at $1.67. Now, even when you adjust for all the one-time items, this number fell short of what Wall Street was expecting. So right out of the gate, that's a clear miss. And it's the same story on the top line. Revenue also came in light at $2.97 billion. That's down over 2% from last year, and it also missed what analysts had penciled in. So we're talking about a miss on both earnings and revenue. But this is the big one. The company took a massive $3.65 billion non-cash goodwill impairment charge. Whoa! In plain English, that's just an accounting move. It's the company admitting that some of its assets aren't worth what they had them valued at on the books. Now, while it creates this huge loss on paper, investors often see this as a brand new management team clearing the deck, wiping the slate clean to reset expectations for the future.
And this table really just summarizes how tough the quarter was. On top of the EPS and revenue misses, you can see net sales were down over 3% if you strip out currency moves. But look at that last line. This wasn't just a Molson Coors problem. The entire U.S. beer industry saw volumes shrink by almost 5%. So it was just a really challenging environment for everybody. So that brings us to the new CEO's playbook, which is the real reason for that surprising stock rally. You see, the market wasn't really looking at the past quarter. It was betting on a brand new strategic pivot for the future.
Investors were just looking for a sign, any sign of change, and the new CEO, Rahul Goyal, delivered. This quote from the earnings call, it signaled a whole new era of urgency and purpose, and that was exactly the message the market was desperate to hear. At the heart of this new vision is what Goyal called the barbell strategy, and really, it just means the company is going to double down on two opposite ends of the market. On one side of the barbell, they're going to defend their core, their economy brands. And on the other side, they're going to get super aggressive, pushing into the higher margin premium and beyond beer stuff. So here's how that strategy breaks down. First, you protect and fortify your core brands. Think Miller High Life. Second, you push and push hard into those premium and beyond beer categories. Those are the growth areas where they've been weak. And third, and this is so important, they're going to take the money they save from all this restructuring and pump it right back into marketing and new tech to fuel that growth. Of course, a new plan is great, but this pivot isn't happening in a vacuum. To really get why the market reacted the way it did, you have to understand the incredibly challenging environment Molson Coors is up against. And make no mistake, this is an uphill battle. They're dealing with soft demand for beer here in the U.S., stubbornly high aluminum costs, and the internal pain of a major restructuring. And then on top of all that, they confirmed their full-year results would hit the low end of a forecast they'd already cut. These are some serious headwinds.
This chart right here, it tells you everything you need to know about how low expectations were coming into this report. Over the past year, the stock had fallen over 22%. Meanwhile, the broader consumer staples sector was only down about 3%. The market had already punished this stock, so any credible sign of a turnaround was going to be welcomed with open arms.
So, with all of that context, the messy quarter, the new game plan, and rock-bottom expectations, what's the final verdict? Let's get to our analysis and our outlook for the company. So looking ahead, these are the things you need to watch for. These are the proof points for the turnaround.
We'll be watching the gap between what they ship to stores versus what people actually buy. We're going to be tracking aluminum prices. We absolutely need to see if they can start gaining market share in those premium categories. And finally, we'll be looking for their 2026 outlook and any plans to return cash to shareholders.
So what's our final call? We're rating the stock market perform. This is now a classic show me story. The new plan, it sounds good, it's credible, but actually pulling it off, it's going to take time. For next quarter, we're expecting earnings to be pretty cautious, probably somewhere in that 85 to 95 cents per share range. Because of that, we see the stock as pretty much stuck in a range, say between $40 and $50 for now, as the market just waits for proof. All that pessimism is already priced in, which should limit the downside. But a real rally from here, that requires results.
The decks have been cleared. A new course has been set. For Molson Coors, the turnaround story officially starts now, and it's all about execution. That's our breakdown of their pivotal quarter. And as always, this is not financial advice.